Hey everyone, as a funding and consultant credit coach, the most common question I get is how much is my credit score really costing me? Well, today I'm going to be breaking down exactly how your credit score affects your wallet across four major financial products. We're talking real numbers that could mean thousands of dollars in savings or extra costs. Let's go ahead and dive in. Before we get into the specifics, let's quickly break down credit score ranges. Excellent credit. You got a 760 to 850. Good credit, 670 to 6 to 760. Average credit, 640 to 669. Your poor credit is 620 to 639. And bad credit is anything below 620. These ranges can vary slightly between lender to lender, but they're a good general guide. Now let's see how these scores affect different financial products. Let's go ahead and start with the biggest purchase that most people make in their lifetimes. It's buying a home. Well, let's look at an example with a $150,000 mortgage with a 30-year term. With excellent credit, your interest rate would be around 3.2% when interest rates were low. Monthly payment would be about $650 on that $150,000 mortgage. And your total cost would be about 233,000 and some change. Now, with bad credit below 620 score, your interest rate would jump up to about 4.8 and your monthly payment would jump up to about $800, which would make your total cost 283,000 and some change. That's nearly a $50,000 difference. Think about what you could do with that money. That's a college tuition, rental property down payment, or a serious retirement boost. So you want to think of it like this. For every 20-point increase in your credit score, you could see your rate improve by 0.2%. So it matters a lot. So next up, let's talk about car loans. Let's go ahead and look at a $30,000 auto loan over 60 months. Well, with an excellent credit scenario, once again, when interest rates were great, a 3.4% monthly payment would have been about $545, which your total cost for that would have been about 32,000, almost 33,000. In the bad credit scenario, your interest rate would jump up to 14%. Monthly payment almost $700, and your total cost would be almost 42,000. That's over $9,000 in extra interest. And here's what most dealers won't tell you. They often mark up your interest rates by 2 to 3% above what you actually qualify for. That's why it's crucial to know your credit score and shop around before visiting the dealership and letting them shotgun your credit. Credit cards show one of the most dramatic differences, and they're next up on our list. Excellent credit would be about a 17.6 APR. Well, bad credit could jump up to 25.4 or even higher. I've seen it much higher. Let's put this in perspective. On a $5,000 balance at 17.6%, 880 in interest per year. At a 25.4%, that's 1,200, almost 1,300 in interest per year. Plus, better credit scores qualify you for higher credit limits, better rewards programs, sign-up bonuses, balance transfer offers. Now, here's something that many people don't realize. Your credit score actually affects your insurance rates. We're looking at annual car insurance premiums. Your excellent credit, for example, maybe 1,500. Well, your bad credit might be 25, almost $2,600. That's a 72% increase. And over a decade, that's an extra 10,800 just because of your credit score. Insurance companies use what is called a credit-based insurance score. They've found that credit scores can predict claim likelihood. So adding it up, the difference between excellent and bad credit could cost you 50,000 on your mortgage, 9,000 on your car loan, thousands in credit card interest, and over 10,000 in insurance premiums. That's why credit repair and maintenance isn't about the numbers. It's about securing your financial future. If you're ready to start improving your credit score, go ahead and hit the subscribe button. Check out our free and credit improvement guide labeled Boost in the description. Go ahead and drop a comment with your biggest credit question and I'll answer it. And if you need personalized help, go ahead and set an appointment for consultation and we can get you on the right track to improving your credit or seeking funding, whichever is your main priority. When it comes to funding, you're going to need credit. So you're going to need credit in life. So let's go ahead and get that taken care of. And until the next video, stay financial savvy.